Hello, everybody. It's your loan officer, Justice Roberts. I'm coming to you today from Spokane, Washington. My family and I are traveling. I've got my brother that is getting married this weekend, and so very excited for that. But working from out, not in the office today, so you guys get a little bit of a chance of some sunny weather here. Today, we're talking about refinance and why should you refinance and what are some things that you need to consider. And there's definitely a few different things. Number one is understanding what types of refinances there are. So number one, there is what's called a rate and term refinance, where we're just changing the rate and we're changing the term. We're not accessing any equity and pulling any equity out. And then option number two is what we would call a cash out refinance, which is where we are pulling equity out of the property in some form or fashion. As far as a rate and term refinance, one of the things to consider, there is not a specific number or percentage that an interest rate may or may not need to drop in order for it to make sense, based off of your specific situation, specifically as it relates to your loan amount, as well as where you're at in your amortization schedule. So for instance, if your loan amount is greater, it might make sense for your interest rate percentage to still drop because the payments will adjust more on a loan amount that's higher than one that's lower. Consequently enough, if your loan amount is lower, like we may need the market to move, 1%, 2%, or 3% before it would make sense to refinance. So there is not a specific percentage number. And really what we should be focusing on in those specific scenarios, and this is what, I kind of pride myself on, is doing what we call a cost benefit analysis. And what we do is we compare the cost of the loan and look at the benefit, like what actually is your benefit. And I've got lots of fun calculators, as you can imagine, that we can run to actually compare and take a look and go, okay, if it's going to cost us this much, how much is it actually going to save us per month, which is based off of the actual savings or, the dollar savings of what you're going to save, per month, but then also what are the interest savings that you're going to be taking advantage of and actually having, because the higher your interest rate is, you're going to be paying more towards the interest and less towards the principal of your house, where in a lower interest loan, you're actually going to be paying a higher amount towards the principal. It's weird how that works out. But all that to say is if we're able to do a comparison to actually look at what the cost is versus what your benefit's going to be, we can actually come up with what, a short timeline and understanding, does it make sense based off of the timeline that we're going to be in this house. And I typically like to see in most scenarios that we want to see a break even under 2 years. Ideally, I'm under, 1 year or maybe 6 months, but, it may not necessarily be it may not be super realistic to take that into account, but typically within a couple of years, we want the loan to pay for itself. And so that's definitely one thing that I would say. And then the second thing that we're helping a lot of people out as far as having conversations around is accessing equity in their home. And sometimes we're doing a 1-for-2 special where we're lowering the interest rate and we're pulling equity out at the same time. So there certainly could be benefit both directions. However, pulling equity out of your house, there is, if you're going to refinance, that may be the exact right opportunity to take a look at accessing some of the equity that you've built over the years. So without belaboring the conversation, if there's any interest whatsoever in diving into a little bit more of a specific conversation for your mortgage, for your situation, or if there's anyone that you care about and know that would benefit from having a conversation regarding a refinance, love to have a conversation with you, really just to have an unbiased, really just looking at the math, looking at the numbers, and helping you to understand what your options are at the end of the day. Hope you have a beautiful weekend, and I look forward to talking to you later. All right, see ya.